Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday the 16th of March 2020, and earlier we produced an emergency video entitled Silver Slumps Below $13. Gold to silver ratio equals 119 to 1, where we highlighted, at the time of publication, which was around 10 o'clock GMT, gold had held steady, or in fact was at that stage up $2 at 15.31, and silver had basically collapsed $1.91 to $12.84, pushing the gold to silver ratio up to 119 to 1. Now, we drew members' attention to the video we published on Sunday, entitled Central Banks Cut Rates, but Is It Enough?, where we basically concluded that the answer was no, and that the Fed would be expected to cut rates on Wednesday by 0.5% and possibly by 1%. Well, the reality was that the Fed actually cut rates early, Sunday evening, by a full 1%, leaving the Fed funds rate now standing at 0% to 0.25%, much to the delight of President Trump, who has been calling for such a move for some months. Now, frankly, we think the Fed should have waited, as it truly smacks of panic. And at the time of producing this video, which is just shy of 1800 hours GMT, though by the time it's actually uploaded on YouTube it might be an hour or so later, we can see that the Dow is down another 2,108 points, or 9%, at 21,077. The S&P 500 is also down 9%, at 2,466, and the Nasdaq is down almost 9% at 7,171. European markets in general are down between 4%, as in the case of the FTSE 100 index, and 5%, as in the case of the DAX index. This, we suspect, is the very opposite that President Trump was hoping for. But when the markets are faced essentially with a 1.5% cut in rates within 2 weeks, earlier than planned, earlier than forecasted, earlier than scheduled, surely it's clear that the central bank is giving signs of panic. Now, the dollar index is down, though, just 0.7 at 98.03, having been down well over 1 point earlier today. So the dollar once again is holding up remarkably well. Gold is standing at exactly $1,500, but as we say, the time between producing this and publication is between 1 and 2 hours, so that figure may change, so do watch out for it, which was down $28 on the day, but has been as low as $14.51. And silver is standing at $12.86, down $1.89 today, but has been as low as $11.81. The gold to silver ratio is still hovering around the 119 to 1 level, though it had peaked momentarily at 122 to 1. Now, before we continue, we wish to clear up a point that some subscribers are making. The paper market is undoubtedly controlling the price. But this does not mean that the government or central bank is manipulating silver's price downwards. It has no need to, even if one assumes that it does do this normally, which we have counted on numerous occasions. But even if you believe that, there was no need for them to manipulate the silver price today. You see, the price fall is both logical and expected, though the speed and perhaps the size are both faster and larger than even we anticipated within this very tight time frame. We are also entering into the territory that no one can now predict with specific accuracy from here, because we now have traders operating in a state of fear and panic, and therefore logical actions are unlikely, and a tendency for extremes to occur are very likely while we go through this phase. See, if the Fed did not realize what yesterday's drop in rates would result in today, then we'll have to join the long queue calling for the board's replacement. You see, for the sake of waiting 2 days, they could have dropped rates then by 0.5% and then promised to do so again in a week or two time if necessary. But instead, they've left themselves very limited firepower left, created market panic, and to be blunt, have lost an enormous amount of what limited credibility they had left in anyway. The only proviso we place on these remarks, and we hope we are wrong, is that the Fed knows there is much worse news to come, and have acted this quickly to help ameliorate what is around the corner. And if that is the case, then anyone with a 401k and retiring soon are going to witness a vast reduction in their anticipated pension. And just out of interest to share a piece of personal information with you, not that it's that important to those listening, but important to me. One of my pension providers, I have a few, wrote to me today to tell me that my pension fund, which was converted to a defensive low-risk fund just over 11 months ago, has fallen by 11%, which looks like a great achievement since markets generally have fallen by over 30%. Can you believe I've written to them today telling them what a marvellous job they've done, allowing me to lose only 100 or so thousand pounds of the wealth that I held with them? Thank goodness my equity portfolio is now tiny compared to what it was in 2019. And even those stocks that I hold were and are defensive stocks. But they too have fallen dramatically. And unfortunately, neither gold nor silver has come anywhere near compensating me so far for that deficit. Anyway, despite that, I know that I'm in a far more fortunate position than many. And even controversially, Greg is limiting his physical contact with people. So that tells me things are going to get a lot worse, because there is very little that confines him to his home. The Empire State Index, which was published earlier today. Now, if you haven't heard of it, it's otherwise known as the Empire State Manufacturing Survey, conducted by the Federal Reserve Bank of New York. Now, if I were to tell you that in February the index was a positive 12.9, and for March the figure is a minus 21.5, where economists were expecting a reading of plus 4.8. This is the lowest level since the financial crisis in 2009. Now, tomorrow there is a spate of data being published for February, including retail sales and industrial production. And we suspect these figures are not going to prove that great either. Now, for those who follow the technicals, gold has fallen through the 200-day EMA, but has recovered a little. If it dips to or below 1450 again, we can expect to see it gravitate towards 1400. But our contention is that just below that level, buyers and investors will be interested in gold again. And so it's quite supportive at around that sort of $1380 figure. There is no doubt, you see, in our mind that the sell-off has been a mixture of profit-taking and covering large equity losses. And we should not necessarily be put off by this. Now, tomorrow we're going to produce a video which hopefully will show you how you can access gold and silver very close to spot price. So please watch out for that. It won't work for everyone, but for those living in the right location and are swift, there is a great opportunity to be had. Now, like gold, silver has also suffered liquidation, but on a much larger scale proportionately. It's now sinking in that global trade is falling through the floor. And this means China and other manufacturing countries are not buying physical silver for industrial purposes. Now, it is quite possible that perhaps the fall has been overdone. And from a technical point of view, it is certainly oversold. But in this market based on fear, literally almost anything can happen. And we should not be surprised if silver recovers an extra dollar or two, or even loses another dollar or two during the course of the next 2 weeks. If the economic figures this week are worse than expectations, we'll see a further slide. If they're a little better than the greatest fears, there might be a slight recovery. But we doubt that we shall see $16 or $17 silver for a little while yet. Now, some analysts, admittedly, are talking about a dead cat bounce recovery, and that is indeed a possibility. However, the geopolitical situation still has some time to play out, and as is often the case, things have to get even worse before they can get better. So, as this is the second video today, we shall keep it relatively short, and ask you to tune in tomorrow, where we hope to reveal how you can legitimately and morally take advantage of the situation with regards to acquiring gold and silver at reasonable prices close to spot, rather than paying the hefty premiums that most dealers are now demanding. Now, also in the meantime, we would be most grateful if you would also follow our Richard and Greg channel as well as this one, as we are updating the geopolitical situation literally every other day. And hopefully you won't forget to subscribe to each of them, pressing the bell sign so that you're notified of new videos as and when they are published. Thank you so much for listening. Until tomorrow. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.